Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Only got a little bit of news stuff for you because it's Sunday, and for some reason crypto news doesn't operate on Sundays like the mainstream news for whatever reason. So, we got a few news things for you, and then I got a couple of little bonuses on the end. But the first thing I'd like to talk about is the Intercontinental Exchange CEO, Bakkt, says it will launch later this year. So first it was December something or other, and then January 24th, and then it was like, no, it's going to be delayed because of the SEC, and now it's going to be potentially later this year. So who knows what the date is going to be now, but in case you don't know, Bakkt is going to be a new futures exchange. It's going to be sort of the first of its kind instead of paper futures where they're just sort of trading and betting on Bitcoin with money, and then they get paid in money, settled in money, if you will. It's actually going to be with Bitcoin. So you're going to pay in Bitcoin. They're going to have to buy Bitcoin to settle the Bitcoin, etc. So it's going to create a demand for Bitcoin sort of either way. They actually have to hold the Bitcoin in order to pay out the Bitcoin, and therefore they would have to buy it. And of course, increase demand because of that. So the CEO of ICE, not that ICE, but the Intercontinental Exchange ICE, expects the firm's digital asset platform to launch later in 2019. The comment was made by ICE CEO Jeff Sprecher during an earnings call. The call was dedicated to ICE's financial results for Q4 and the full year of 2018. Sprecher explained that the company spent over $1 billion on strategic initiatives, including the launch of the digital assets platform. He says, and finally, our investment in Bakkt will generate $20 million to $25 million of expense based upon the run rate in the first quarter. And we will update you on progress at Bakkt and the level of investment as we move through the year. So they're just going to generate 20 to 25 million in the first quarter, but I don't know how they're going to do that necessarily. And that's really sort of chump change in the investment world just in the first quarter. But we'll have to see how that's going to happen. When asked about the expected returns or revenue growth from recent investments, including Bakkt, Sprecher characterized the crypto platform as a moonshot bet for ICE. So it's a bit of a moonshot bet, and it's been organized in a manner that is very different than the way ICE typically does business. So yeah, because it's crypto. And they're well along in building out an infrastructure that I think you'll see launch later this year. Sprecher added that Bakkt exists independently from ICE as it has its own offices, management team, and infrastructure. He stressed that the project's infrastructure has already attracted a number of high-profile investors, including Starbucks and Microsoft. Starbucks is a big thing. They want to have, like, Bakkt cards where you can pay and you can get your change and Bitcoin and things like that from Starbucks, which is, you know, an interesting idea, for sure. And then Microsoft was also one of the people that invested that total of $182 million in their funding round, if it will. So the venture capitalist, I suppose, funding round. So it was Microsoft's venture capitalist arm that funded some of those millions into Bakkt futures. So, you know, ICE first announced its launch of the platform in August 2018, that it was set to launch in early 2019, but it was delayed due to ongoing consultations with the SEC, etc. And now that the government shut down, that took longer for that. So who knows when it's going to come out. Now it's just later in 2019. So again, the whole institutional investment arm wing of cryptocurrency, again, is just so akin to Game of Thrones, especially that South Park episode where, like, oh no, the pizza's coming, the dragons are coming, I promise, everything's coming. And then it's not till like season 6 or 7 when everything starts to really get good. So actually, the whole show was really good. You should watch it if you haven't. I didn't get paid to say that, but HBO, you can hit me up if you want. Doubt that'll happen. Anyway, moving on. So, Litecoin price analysis. How high will the halving hype push Litecoin? So, I'm not really going to get into the TA of Litecoin, again, because I feel like TA, sure, it's great for short-term trading, but in terms of long-term, nobody guessed, no TA guessed that 2018 was going to be a complete bear market. No TA guessed that, you know, BitConnect was going to go under and just basically destroy the whole crypto world for a while. No TA guessed that Bitcoin Cash and Bitcoin SV were going to have this war and sell off millions of dollars of Bitcoin and then lower the price. So we're not going to get into that. But what I do want to talk about is the halvening. So in approximately 179 days, Litecoin will undergo a blocker reward halvening. similar to Bitcoin. Cutting the coin reward for miners from 25 to 12.5 coins, with fundamental developments like confidential transactions reportedly in the works, the whole privacy deal, and partnership with Mimblewimble, Beam, etc., with fundamental, and the popular altcoin experiencing price strength confirmation. So how high will the halving push the price of the peer-to-peer cryptocurrency? Well, nobody knows, and I'm not going to get into that. So if you're not accumulating Litecoin right now, you might want to consider adding the altcoin to your portfolio. On August 8th, 2019, Litecoin will undergo a block reward halving, which will reward miners with half of the current reward for successfully validating blocks. The Bitcoin block reward halving typically garners all of the spotlights, and rightfully so. Such an event has historically impacted the price of the market, leading cryptocurrency in a positive fashion. And many experts are predicting that the next Bitcoin halving on May 24th, 2020, will likewise trigger a spur on the major bull run on the next one. So with more people aware of this fact than ever before, it stands to reason that hype will build around Litecoin's earlier block reward halving as we progress through the year. The only thing I have to say about the whole Litecoin halving thing is right now, Litecoin mining is not that amazing. With script miners, is typically you're eating the electricity. So unless there's like better script miners that will be coming along soon or later here, that halving will be really bad for miners. Usually a halving is really bad for miners right off the bat, and then the price increases later. But a lot of coins have halved, and they didn't necessarily go up in value, and along with the bear market, they actually just went down overall. I was mining Vertcoin for a little while, and it had a reward of 50, and then it went down to 25, and at that point Vertcoin was significantly less profitable, as you're just essentially getting half the rewards no matter what. And the price never really went up. However, we did run into the bear market at the same time. So, you know, it's hard to say if that even worked. So the next article is basically the same thing. With the next Bitcoin halving about a year and a half away, many investors are preparing strategies to help them accumulate and add to their position in a zone of maximum profitability. So again, we've had two halvings with Bitcoin so far. One in 2012, the other one in 2016. And about 6 months or so after the halving was a pretty big price increase. But that's only two events throughout history, and that wasn't really necessarily during bull or bear markets. There were some bad things that have happened over the years with Mt. Gox, and then there was the bubble that sort of popped at 1100 down to 100 because of Coinbase coming along and sort of hyping it, and then it just sort of died down, and then later after that there was the Mt. Gox. So it's hard to say if really those halvings were actually, you know, what caused the price to increase, considering it didn't really even happen until about 6 months after each one anyway. So I would say that in 2020, during the halving, I'd say it probably wouldn't be about till 2021 or close to that, towards the end of 2020, when after about 6 months have passed, that the price is going to increase. And that could be for really, honestly, a number of factors, and not necessarily just because it halved. But by using the previous halvings and price movements as a guide, we could better predict price levels, bounces, and movement patterns of the future. So you can see here, Bitcoin is 15 months away from the next halving, May 2020, and we had a negative 25% difficulty adjustment through November and December of 2018. So a halving in crypto is just, when the block reward halves. I'm sure most of you know that. So at the time of writing, there have been two previous Bitcoin halvings, the first in November 2012 and the most recent in July 2016. The reward for mining a Bitcoin is currently 12.5 BTC, which will be cut to 6.25 BTC. And this is why Bitcoin won't be mined till like 2140, because then we're going to go to, 3.125. I don't know, whatever, halve, and then have that, and then have that. So eventually the block reward for Bitcoin is going to be less than one Bitcoin within, just a number of years, every 4 years. So maybe 16 years from now, I don't know, math, didn't do it previously. So, yeah. Anyway, so Bitcoin halvings occur every 210,000 blocks, and the next estimated occurrence should happen in May 2020, nearly 15 months from now. It's also important to note that to point out that decreases in the Bitcoin difficulty hashing and tests of the 200-week moving average have both historically resulted in significant growth for Bitcoin. Bitcoin tested the 200-week MA back in December, preceding a 25% difficulty decrease the month before. And so taking a look at the logarithmic weekly index chart can help to better estimate price fluctuations. And in the 365 days that led up to the two halvings, Bitcoin saw periods of fairly steady movement to the upside. Just the same, the halvings themselves were catalysts for periods of explosive growth, and the prices skyrocketed. Bitcoin grew to 9,000 after the first halving, and 9,000% and 3,000% after the second. Considering a similar 2/3 decrease, the next bull run could bring prices upwards of 150,000 for a single Bitcoin. Well, I don't see that's impossible in 2020, and probably in late 2020, but I'm not sure if that's going to be necessarily true or not. I think a lot of the reason because the Bitcoin halving was in 2016. Then about 6 months later, of course, we have 2017. And 2017 was when, you know, BitConnect came out and when all these referral links and Tether popped up. I really got to clear my throat today. And that was what really, in my opinion, caused the explosive growth of 2017. We went from $1,000 to $20,000, which was really just unheard of in Bitcoin previously. And of course, we accumulated to 1,000 previous to before that, but it also dipped, and it was a pretty slow growth to 1,000. But there was a very rapid growth to 20,000, and I think it was for a lot of reasons. I think everybody was buying Bitcoin for Genesis mining and for Hashflare, and then sending out referral links that would convince other people to buy in. And then BitConnect was growing and everybody was making money, so everybody's coming in and buying and buying and buying, exploding, ICOs everywhere, Tether popping up, and nobody knows if Tether was even really actually backed by US dollar. So I think 2017 was sort of a fluke, and to like really put a 3,000% growth on the second one, which again usually doesn't occur for about 6 months after, so it's 2017. I think it's a little silly to think that you know, that's that 2017 is. I think essentially we should just throw 2017 to the wolves, just throw it in the ocean, because that wasn't real growth. I think 2017, if you just simply removed it, we'd be probably at where we are now at 3,500. The whole 20,000 growth thing was basically irrelevant to most people. And it was actually quite ephemeral. It was only till the end of the year when we hit 5,000, and then it just immediately exploded to 20,000. So it's hard to say if it's really going to explode or not. So 1 year before the first halving, and then you can see after the first halving here, we sort of exploded. And it took a little while. So you can see 2012 at the end of 2012 here, and then 4 or 6 months later, you can see at the beginning of 2013 there. So in 2012, it was November, so maybe it was only a few months before the first halving. And then the second halving occurred here, and it depends on where you want to look at where the growth started, because I mean it's squared off here easily, but and that's where the growth really started. But you can see the growth really started in a lot of places, 1 year before the halving and after it. So this is where the other halving is going to be, and this is where it's expected to be maybe after that. So who knows if it's actually going to be that much or not. Moving on. So we've ran out of news for the day. So we're going to talk about this post. This post made it to the top of the cryptocurrency Reddit, which a lot of things make it to the top of the cryptocurrency Reddit, so I don't think it makes it that special. But it's very interesting. This shows how a lot of people see cryptocurrency and how a lot of people invested and why they were so poorly investing into cryptocurrency. So this guy says, I bought $50 worth of Ethereum, and mind you, none of this makes any sense, but we'll go with it. $50 worth of Ethereum on Coinbase. I instantly sold to US dollar. I now have $45 on my Coinbase account. So first of all, why would you buy $50 worth of Ethereum and then immediately sell it once it went down in price? Did you get scared? So this is the problem, is with scared investors. This is why I like to say that investors are kind of like horses. They get spooked very, very easily. If their coin goes down a few bucks, they just can't hit the sell button fast enough, and which is just unbelievable. So now have $45 on my Coinbase account. So I don't know if this post is true or not, but this really has a lot of parallels with a lot of cryptocurrency investors, that basically people that should never have been investing, as I feel that cryptocurrency brought a gamification of money. It brought a lot of people into day trading, into investing into BitConnect and these pyramid schemes, and buying and hodling for the price to increase. Unlike anything in history, in my opinion, except for maybe the tulip bubble, which was really silly. But anyway, anything at least reasonably close history, nobody has ever done this before, because before there was sort of a big gap into getting into stock trading. Every stock trade sometimes costs you several dollars, $8 a trade sort of thing, and so you need to invest a lot before you actually trade, because if it's $8, $5 a trade or something like that, where it used to be anyway, then you really need to wait for big profits before you actually make a trade, or at least make very large trades. So crypto was the first time that you could put in $100 and make a few bucks a day by day trading and feel good about it and know, like, hey, I made 1% today. That's incredible. For anybody to make 1% in any other market, absolutely wonderful. So he says 10% loss in minutes. Again, why would you sell immediately in minutes? This is a major problem. So $14 fee on a $1,000 purchase, $367 fee on a $25,000 purchase. If I want to use that $45 to buy back Ethereum, it's another 4% charge. What a scam. Talking about Coinbase. Now, I made a lot of videos back in the day on how to use Coinbase for free, where you won't have to pay anything for your day trades, and I'm surprised that people are still not watching that video. It gets a little views, but it's literally on the front page of my channel. It's like my introduction video on day trading Bitcoin. Now, it doesn't teach you how to be a master of day trading, but it certainly gives you the initial ability and initial education to just go onto Coinbase, make an account, then you go on GDAX, or what it is, Coinbase Pro now. And you can just use limit orders, or you can use a bank transfer to transfer for free, and then use limit orders to trade again for free. And sometimes limit orders, you need to do a market buy if it's something real quick. If the price is going up or down, you really want to get in. Fair enough. It's just a few bucks. Sometimes if you're trading thousands, it's really not a big deal. But mostly use limit orders because they're totally free. Set a limit buy or a limit sell, totally free. And why anybody continues to, literally in those videos, I told people, don't use Coinbase. Just use Coinbase to initially sign up, and then use their exchange GDAX, or use a different exchange. It just, at the time, that was my preferred exchange. It kind of still is for trading, because again, free limit orders is amazing. And then you can literally send that money that you made to your bank account for free. Is it the best exchange? It might not be. Is it the worst exchange? Certainly not. But why people continue to use Coinbase when it has outrageous fees, instead of just using their exchange GDAX, Coinbase Pro, I have no idea. I still don't understand. I actually made numerous videos on how to trade Bitcoin for free, but here we go with that. So one person says, why did you buy an Ethereum and instantly sell it for US dollars? Wouldn't it make more sense to just deposit US dollar? And it says that they charge fees for instant transactions. That's what you get for using Coinbase. In a bull market, it doesn't really matter so much because it's so much money. Yet in a bear market, good luck. Again, don't use Coinbase. Just use Coinbase Pro and use free limit orders. You can send from your bank account for free, trade for free, and then send it back to your bank account for free. You never paid a dime. I've paid a little bit of fees with market sells, which I know some people don't care. You know, it depends on the deal. Exactly. What a ridiculous tweet this guy made. It's not a scam. It's called a bid offer spread. Coinbase or any other exchange would never buy and sell currency at the exact same price, as they'd be out of business. This guy could buy gold from any bullion dealer and try and resell it instantly. He's going to find out that if he does, he'll lose 10% of the value in the back-to-back transactions. Exactly. So again, guys, if you're using Coinbase and you're paying these ridiculous fees all the time, and you're like, man, crypto has a lot of fees, go back on my channel a little bit and watch some of those older videos. Anyway, moving on to the next topic here, also on the cryptocurrency Reddit that I found interesting, was I'm curious to hear from people that are invested in altcoins, but not in Bitcoin. Explain yourselves. I know that some people say that Bitcoin is a dinosaur, but the technology is improving quite rapidly, in fact. I don't know if it will hold strong against the second and third generation coins. But it certainly has a lot of fantastic use cases as a payment system, which it does. And Bitcoin is the first. It has the most security. It's the longest running chain. It's a great store of value. Most institutions and most businesses are now, a lot of them are starting to, more and more are starting to accept cryptocurrency. Institutions are going to accept cryptocurrency and start trading Bitcoin. It's the brand name, and that's why. That's why people are investing into Bitcoin. First of all, we'll answer that question, I guess, because it is the brand name. It's the first thing you talk about. Like, imagine talking to cryptocurrency to a friend who's never heard of it, or to a coworker, or to a neighbor, and they're like, "What do you do?" And you're like, "Well, I trade cryptocurrency." Or, "Have you ever checked out cryptocurrency?" What's the first coin you start to talk about? Nano, Neo, Verge? What is, it's always Bitcoin. Like, okay, well, Bitcoin was created. It's this, and you go into talking about Bitcoin. In the same way that you talk about a lot of brand names by the brand name and not necessarily, like you don't ask somebody, "Hey, do you have an acetaminophen?" You ask somebody, "Hey, do you have a Tylenol? I have a headache." Just kind of thing. It's not actually Tylenol, it's acetaminophen. Everything that's, so it's just, it's a brand name sort of mentality. And that's why it has the longest running chain, and because it is the longest running coin. It's why it has the most money, because it's the longest running coin, the biggest brand name. But some of the replies were pretty interesting. It says, because Bitcoin is the soul of crypto market, has less room for profit to an altcoin with 1,000 smaller market cap. And it says that, what an altcoin I would not invest in? One that has ridiculously slow confirmation times, is ASIC friendly, fees that don't scale well, creators that mine 5% of the total supply for themselves, and caps out at single digit transaction per second. Oh wait, which is honestly Bitcoin. Now, the creators mined 5%, but mostly that was an experiment, and we don't know who actually mined that coin or if it's still in use. You can kind of see it in some of the original wallets, but again. So look, guys, you all agree, as it is undeniable, that Bitcoin is inferior tech. It's just plain true. Good security, again, there's a lot of positives about it, but if you don't talk about the negatives about it, then you're not really being objective. The proof is in Lightning Network itself. Lightning Network can be applied to any blockchain, but it is discussed alongside Bitcoin because it's the only one that actually needs it, which is kind of true, although a lot of coins could use it. I really wish Bitcoin worked as well as the other cryptocurrencies out there, but then because then I would acquire a ton of it. But let's put it this way. In terms of features and performance, if Bitcoin was to launch a new project by today's standard and all other non-BTC derived cryptos were available, literally nobody would get involved. And that's true. That's so true. I've said that on my channel numerous times. Literally almost this same thing. Let me put it this way to you guys. If I came up to you or I made a video talking about a new coin that was coming out that's so exciting, right? And so you're like, okay, what's this new coin called? I say it's called Bitcoin. Let's say Bitcoin was never developed. Let's say Ethereum was the first to be developed, or Litecoin, or whatever, any coin. Just go back in time and switch it with Bitcoin with something else. So I come up to you and you say, well, what is this new coin you have for me? I say, it's called Bitcoin. And you're like, wow, that sounds cool. It's a good name. I'm like, yeah, it sure is. And I say, and you're like, well, tell me about it. Like, are the transaction, fees really low? And I'd say, no, in fact, it's one of the highest fee transactions of any crypto, although it's going down now. And you'd be like, well, okay, that's not good. So if it has really high fees, it must have like really high transaction per second. And I'd say, in fact, no, it does not. It has one of the lowest transaction per second coins. And you'd be like, what, does it have privacy features? Absolutely not. It does not. And so you're like, well, can I mine it with my GPU? Absolutely not. You have to actually go out and buy hundreds of or tens of thousands or hundreds of thousands of dollars worth of ASICs to actually make some kind of reasonable profit with them. And so the more that I would explain Bitcoin to you, the less you would be interested in it and the less people would be mining it. The reason why people are all interested in it because it was the first, it had the big explosion in price and people made a lot of money from it. It's the brand name, it's the base coin, if you will. So people really have to take that into consideration, and it's really a great coin for a store of value, and it's going to get more and more rare over time. It has a lot of great qualities to it, but a lot of very bad qualities as well to Bitcoin itself. And another thing about the crypto market is that the more and more people that get into the crypto market, the more people that get onto a good thing, they make it a bad thing. So if something is too easy and makes too much money, it will eventually, in the same way of like in physics entropy, it will level out. and become more difficult, because if there's too many people making too much money, it just won't work. It doesn't work like that. So crypto has started to become more and more hard to get into. Now, anybody can just go on and buy $100 worth of crypto, but it's a totally different world than it was a few years ago or even before that. So now, to really get into mining, you need to put a lot of graphics cards into it. You're going to need a lot of graphics cards, unless you're mining brand new coins and sitting on them till they go onto an exchange and making a few bucks. Great. But it's starting to get harder. It's starting to get harder. Even if you just have $100 or $1,000 to day trade it, is not as good as it used to be, of course, because we are in a bear market. But again, the whales are starting to take over. It's starting to get a little bit more corporatized, and that's just the way it's going to be. In the way that today making a business is kind of hard. You're going to need to get a loan, but hundreds of years ago it was easy. You could just do a trade and set up a shop and start going, kind of thing. So everything gets harder over time when it's a really good thing. If a highway lane doesn't have anybody in it, everybody's going to shift over to that lane and make that lane slow. If a restaurant has absolutely saucy food, everybody's going to go to that restaurant, and you're not going to be able to get a reservation or a seat, and there's going to be people everywhere, and it's going to make it a bad time for you. So anytime something is good, everybody's going to flock to it. In the same way that with GPU mining, let's say you're making 10, 20 cents a day on profit of your GPU. That's not really going to get you anywhere. So the single GPU miner and the few GPUs, great as a hobby, but that's not going to really get you anywhere anymore. Now you need 100 GPUs. You need a few hundred GPUs. So that 10, 20 cents per GPU is actually something big at the end of the month, where you can actually not just sell everything, but you can actually hodl some. So weird world we're starting to get into, and more crypto is starting to come out, taking the cap away from Bitcoin and creating better tech overall. And it's just something objective that you really have to talk about and really have to discuss, instead of going, no, Bitcoin is king. Well, it sure is, but all kings get dethroned at some point. It's just a matter of when, especially if Bitcoin doesn't improve at any reasonable rate. And Lightning Network really isn't cutting it at the moment, because it's way too hard for people to set up. It needs to be a better UI user experience, if you will. So moving on to CoinMarketCap here, 121 billion market cap, 3,657 Bitcoin. So we're still just trading sideways after that big pump. Some coins going down, some coins going up a little bit, but a little bit of green, a little bit of red all over the place. But I still expect to see a pretty big dip of $100 or $200 of Bitcoin. Sooner or later, again, if a bull market doesn't come imminently, which I kind of doubt, whoever this whale was that essentially pumped the market will eventually dump it, probably with some margin leverage, if you will. If you guys get what I mean, gonna leverage that and start dumping it a little bit. And then make themselves quite a bit of Bitcoin and do it again and again. And it's exactly what I'm saying, is that the whales have better means of pumping the market and mining and day trading and things like that, as opposed to the little guy. And that's something that's hard to get away from in the crypto world, in any market. In the world. And I think a lot of people at the start of crypto thought maybe they were going to get away from that. They're going to get away from the millionaires and the day traders and the stock traders and just the institutions. But wherever the money is, the institutions are going to come and could kind of ruin a good thing. Too many people does ruin a good thing. But at the same time, we need many people buying Bitcoin and trading Bitcoin to actually make it a viable thing at the same time. So quite the conundrum there. But that's all I have for you guys today. Make sure you subscribe to the channel, like the video, that helps me out a lot. Social media in the description below, my Twitter, my Twitch, and my Steam account. Follow me on there. But as usual, I will see you guys next time.